Hello, welcome to Chapter 3. We're going to be talking about budgets in Chapter 3. And you survived the first two chapters, and that's a good thing. I appreciate your questions. The discussion board entries are very, very good. Please don't hesitate to give me a call, email, come by my office if you have any questions about the subject matter in this course. You've experienced a lot of new terminologies, and many different concepts are popping up in government accounting compared to what you experienced in your financial and managerial accounting course. I really appreciate the way each one of you have embraced and the material that we studied in the first two chapters. I just appreciate the spirit of the class that I'm sensing as we move ahead in Chapter 3. I want you to pay particular attention to the Chapter 3 notes to give you some incentive of really studying them closely. And these are my notes that I've put posted in the third chapter assignment section in Blackboard. You're going to see some of the multiple choice questions that will be answered within those notes. You've still got to read the chapter 3, but I'm trying to incorporate some of the answers to the multiple choice questions for the 10-question quiz at the end of Chapter 3 in those notes, just to give you some incentive of reading them. Now, in Chapter 3, we're focusing on budgeting. You can read a lot of articles right now, basically, in your local newspapers about the budgeting that is taking place, the governor's budget that is being presented to the General Assembly and for their consideration, and how that budget may differ between the governor's request and the General Assembly's votes that they take on the budget. You'll even see some difference between the House and the Senate in the North Carolina General Assembly. Another budget, and that is going on now as well, between Wake County Public Schools and the Wake County County Commissioners. You'll see that budget request and how that will ultimately be decided. Okay. In Chapter 3, we see some talks about original budgets and final budgets. Both the original and final budgets are required in the general and special revenue funds. Remember, from Chapter 2, general fund and special revenue funds are governmental fund types. Governmental fund types. And budgets are revised throughout the year. You're going to have an original budget at the beginning, but think about it. Who would have known that the gas prices, fuel prices, would have gone as high as they have? So, when Wake County Public Schools at the beginning of 2007, July 2007, started out with a certain budget for fuel costs for school bus, well, those costs certainly have risen over the course of the school year. As a result, budgets are revised, and so additional monies are appropriated for those budgeted expenditures. And I've introduced a new word to you, appropriation. Appropriation is a budgeted expenditure. Now, let me give you two more new terms. We've got allocations, okay, allocations, which are budgeted expenditures in more specific categories. Okay, we're going to talk about some very generic or global appropriation amounts, but those appropriations or budgeted expenditures can be allocated, or an allocation can be done in more specific categories. Okay, another term is allotments, and both of these terms are introduced in Chapter 3. An allotment of budget expenditures may be rationed off in terms of monthly or quarterly expenditures, and they have certain ceilings. Allotments are a matter of timing. The allotment, when it takes place, the money is released for those budgeted expenditures. Allocations, more detailed budget expenditures, and allotments, a matter of timing when those funds are released. Okay, in Chapter 3, you'll see a statement or an example of a statement of revenues and expenditures and changes in fund balance in actuals and budgets. I want you to go to the Wake County Public Schools CAFR, okay, and look for the actual financial statements for the General and Special Revenue Fund. In those financial statements, you will see a column for the original budget, the final budget, and the actual expenditures that take place. Okay, more terminology. Estimated revenues. Estimated revenues are budgeted revenues. Okay, whenever you see that word estimated, that's going to be budgeted revenues. Estimated expenditures, as I mentioned just a few minutes ago, are called appropriations. Estimated expenditures are appropriations. You're going to need to memorize those terms. Okay, you're going to need to memorize those terms. And we're going to take a look at some journal entries, and you'll see this. I want to introduce this to you in Chapter 3. You're going to see more of this in Chapter 4, and as each chapter progresses in our study of governmental accounting. But I've got a chart up here on the board, or on my chart paper, and I just want to show you, I'm going to kind of zoom the camera in here, and I just want to show you a couple of the journal entries. We've got for budgeted budget journal entries, what we're going to do, the first one you see, we're going to debit estimated revenues. Okay, this is really counterintuitive to what you would normally see in the financial accounting. Typically you see revenues being credited. Think sales revenue. Sales revenue credited. Accounts receivable debited. Well, in this case, we've got estimated revenues or budgeted revenues that are debited, and then the budgetary fund balance is credited. Okay? The opposite now for the appropriation or budgeted expenditures are going to be credited. Okay, that's the bottom line down there, and the budgetary fund balance will be debited. Again, expenditures or expenses, typically we would see them being debited, but your appropriations or budgeted expenditures are going to be credited. Okay, let's just quickly review. Estimated revenues, debited. The offsetting entry, budgetary fund balance, is credited. When the appropriations are budgeted, the budgetary fund balance is debited and the appropriations are credited. You're going to have to memorize these things. These are our budgeted journal entries in this class. Now, I want to talk about one more thing on our video. Encumbrances are mentioned at the end of Chapter 3. Okay, remember this term, encumbrances. When a purchase order is issued by a governmental entity, the goods and services are ordered. Okay, the amount of the purchase order is set aside or encumbered. There is a journal entry that is done for this encumbrance as well. Encumbrance accounts are used so that the available balance of the budgeted expenditures or the appropriation is not exceeded. I know that's a mouthful, okay, and I know that's a lot to take on and embrace, but I just want you to know the term encumbrance. When you hear encumbrance, I want you to think about a PO has been issued. The money has been encumbered, okay? And I want to show you now the journal entry that is related to the encumbrances when a purchase order is issued. When a purchase order is issued, we are going to debit the encumbrance account, okay? And we're going to credit the reserve for encumbrances. Debit the encumbrance account and credit the reserve for encumbrances. When you see the word encumbrance, I want you to think of purchase order. On our next video, we will talk about the equation that I've mentioned in the notes, where we will show the appropriation, the encumbrance, the expenditure, and the available balance. Okay, I'll see you on the next video.